All right, everybody, welcome to the webinar here. We're going to go ahead and get started. Again, my name is Dave Wise with the Compass Options Trading Room and Text Alert Service. And I've been a professional trader, day traders and short-term swing trading, mostly options I use. I've been doing this for about 14 years full-time. And I'm not a professional preventer, I'm a professional trader. But I do want to present the information here that as best I can to show you how we find high probability trade setups. It's interesting, one of the questions I get from people a lot of times, and I don't like to talk about myself or how I got here or anything like that, but there is kind of a funny story as to how I became a full-time trader. It wasn't really planned out. I was a part-time trader for quite a few years, and I was working in IT and working with a good friend of mine. Actually, he owned a company who would do cloud computing service, working on servers, etc. So back up 14 years ago in December, it was 2 weeks before Christmas, he told me that he had run into some financial problems with a company, that the cash flow was down. He was going to have to lay me off. So he laid me off about 2 weeks before Christmas. I was okay. I mean, I had been trading part-time anyway, so I thought it would be a good opportunity to trade while I waited to go back to work for him. So December, was okay. Christmas time's not the greatest time to be making trades as over New Year's, but in January I had a really good month trading full time. I was trading from home, trading full time, and February continued. Really good 2 or 3 weeks in February. Was trading very well. And a funny story is my boss, he was a good friend of mine, called me and said, he's gotten the financial situation resolved. Things were booming again, and told me to come on back to work, start Monday morning and see me there. And I had to tell him that, I really appreciate the opportunity to come back there and work for you, but as it turns out, I really can't afford to come back and work for you anymore. It's just as simple as that. Trading had become too good for me, and only 2.5 months, but I had been doing it for a good long time. And that's how I became a full-time trader. I didn't really make a conscious decision. I get laid off and started going from part-time to full-time, and that's what turned into my trading career, and I've been doing it ever since, right from my house. So that's how I get started. All right, so let's get started on the webinar here. Again, my name is Dave, and we're going to talk about the Compass Options Text Alert Service in the live trading room, and let's get started. First thing I have to do, of course, is go through the disclaimer here. All signals and trading opportunities we provide here for educational and demonstration purposes only. Trading is very, very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so if you have any questions anytime during the presentation, you can go ahead and put them in the question box or the chat box, or you can call this number here, and I'll show this later on as well. That's Rory's number in the office, 786-732-4656. That's the Right Line, and they can answer any questions that I can't answer. But I'll keep the question box up so I can see if anybody puts any questions in there. All right, so this is just some graphics on the SPY super system. I'll show you what this is the Compass system right here in the background. What we do is we actually track institutional money flow, and that becomes one of the criteria we use for entering trades. And this is just kind of a graphic of the text alert service. I send out text alerts on SMS. They go out to your phone, and so you don't have to be anywhere. You can be anywhere you want to get these trades, and then you can put trade on whatever platform you use. And it's not like you're going to be swamped with these things. We closed out 2 trades today, and we put 1 on. That's normal. We don't usually. Some days you'll get no trades. So I always want to start with this. And the first thing I want to talk about is what drives the market. I mean, it's really important to understand what drives the market. And this is really just a graphic representation of us as retail traders with these little marbles here. And these probably should be much smaller. And there's millions of us. And all of us as retail traders, we can't move the market. We can't do it. We're just, if the institutions are not in there, and the retail traders are in there by themselves, what you get is a lot of chop and a lot of chaos, and there's just no trend. It's impossible to be consistently profitable when you're trading against just retail traders. unless the institutions are in there. And these are the institutions. Now, institutions are made up of things such as Goldman Sachs, JP Morgan Chase, Morgan Stanley, all the big investment banks, as well as hedge funds. All the hedge funds, and there's tons of them, have billions and billions of dollars to trade and invest, and that's what they do. And then you've got things such as pension funds. Pension funds are massive. Pension funds for state employees, hospital employees, etc., billions of dollars. And then there's also all of the mutual funds, and there are so many mutual funds. If you've got T. Rowe Price, you've got Vanguard, the mutual funds is just one after another. They have billions of dollars. These are the folks that drive the market, and most of them use algos to do a lot of their trading, computerized trading, and this is what moves the market. And when the market is moving, this is what moves it. This is what we want to be able to identify. And if we can identify if the institutions are in there making this market move, we can take advantage of it. All right. So I just kind of want to show a couple of examples of this is SPY. This is not today. This is of last week. But I just wanted to show this is another platform I use for charting. This is TC2000. But I wanted to show you a setup of the SPY regular candles. These are regular candlesticks on the SPY, and this is the same chart here. These are HEIKIN-ASHI candles on the SPY. And the HEIKIN-ASHI, you're going to notice this when they're bullish, you get flat bottoms all the way up. Flat bottoms, bearish, you have flat tops. That's how we identify HEIKIN-ASHIs. And if you go from here, you can see the trend, but if you look at here, it's much easier to identify. All right, so I just kind of wanted to show you an example of that. We're going to get into these HEIKIN-ASHI candles in a little bit, how they're structured, how we use them to trade. Okay, so in the room and on the alert service, I have a couple of rules to trade by. They're pretty basic. We want to trade the best and skip the rest, and this is really important. We don't just take any kind of trade that we see. It has to meet our criteria. It has to be very, very, very stringent to meet the criteria. Those are the trades we're going to take. We don't want to be taking trades that may make money or may not make money. We're only looking for the best. And the other thing, and I say this in the room every day, a lot of people find this kind of odd. Our objective as traders is not to make trades. Our objective is to make money. And we make money by only taking the very best trades. But a lot of people feel as though that I'm a trader. I need to be in something. I need to have some calls. I need to have some puts. I need to have some stock. I need to be in something all the time. And it's a dangerous thing to do, because what it does is it doesn't allow you to have the patience that you need to be consistently profitable. So our objective is not to make trades. Our objective is to make money. So to be a profitable trader, we also need an edge. We need an edge over the other retail traders. Our edges, we use the right line compass system. This is the system that I'll show you that we run on Thinkorswim. This shows us whether the institutions are in the trades or not. If the institutions are in the trades, we can trade it. If they're not, we don't want to be in it. We don't want to be trading just with other retail traders. Now, we take our money from retail traders. We don't take any money from institutions, but we take our money from other retail traders who don't have the same tools that we do. Second thing we have to do is trade relative strength and relative weakness. This is not RSI. This is how a stock is performing versus the SPY or the QQQ. How the stock is performing versus the S&P 500 candles. So I'm looking at 5-minute candles. If I've got the SPY that's moving sideways or moving down, and I've got a stock that's consistently moving up during that period of time, it has relative strength, and vice versa on the weak side. And this is really important, because if you're in a trade and the market turns against you, if you get into that trade with a stock with relative strength, it's going to hold up much better than a stock that did not have relative strength. Which, meanwhile, what does that mean to you? It means you're either going to take some profits where you would have taken losses, or you're going to take a much smaller loss. We want to trade with the market trend if there is one. There really wasn't any market trend today on the 5-minute chart. We have a market trend on the daily, but we don't have a market trend on the 5-minute. So if there is no trend in the market, then we have to trade with just the best stocks. If we've got a market that's trending up bullishly, we're going to go long. If we have it trending down bearishly, we're going to go short. If it's going nowhere, we're just going to take the best stocks we can, short and long. And another key thing here is we buy near support and sell near resistance. This is meant to keep people out of keep people from FOMO, fear of missing out. Jumping into a trade that's stacking green candles to the upside or red candles to the downside, jumping in at the very top and having it reverse and trap you right in the trade. And anybody who's been trading any period of time knows the feeling that I got to get in this, I got to get in this. It's just going to keep going. And of course it doesn't. Stocks just don't keep going in one direction forever. You want to wait for that stock, identify it, put an alert or something near a support level, and then get in. All right, so those are the edges that we have over other retail traders. This is the compass system. This is a graphic of it. The compass system is what identifies the highest probability setups, allows us to find the highest probability setups while sidestepping the setups that look good but will fail more often than succeed. In other words, the setup can look good, but if the institutions aren't driving that setup, it's no good. It's just not going to have the consistency to keep on going. And it does this by identifying when the institutions are driving the move and when they're not. The compass system actually, the software analyzes complex trading data and displays the results in easily identifiable visual format so you can see it clearly. So even new traders will be able to see, and I'll show you, you can be able to see whether a stock is bullish or bearish and whether the institutions are in there or not pretty easily. All right, so again, this is the edges we have over the retail traders. What is our edge? Well, we only take trades that are being driven by the institutions. We only take stocks that have relative strength of weakness versus the SPYs or the Qs, and we're going to be trading in the direction of the overall market if there is a direction to the market. And again, our trades are going to be supported by institutional buying and selling. They're going to be outperforming the index, and they're going to be moving in the direction of the overall market. It sounds like a simple thing, but this is really, really critical. If you make sure you follow these criteria when you're getting into a trade, it's going to make all the difference in the world to your trading. This is basically a funnel. I actually had a video on this. This is a high probability trade setup funnel. So what do I look at when I'm looking at a stock to see whether it's going to qualify? Well, first, I have to have the daily chart and the 5-minute chart aligned. If I'm looking to go along a stock, then the 5-minute and the daily chart both have to be bullish. I don't want to be going long on a bullish 5-minute chart when I've got a bearish daily chart. It takes away all my flexibility to stay in the trade during the day. It takes in all my flexibility to hold that trade overnight. So those are the key things. They've got to line up. If they don't line up, I'm not going to take it. Now, when I find a stock that meets those criteria, then I'm going to trade with the trend, both the stock and the market. So now if we have a stock that's bullish and moving up on the daily and the 5-minute and the market's moving up, that gives me another key criteria. Now, if we don't have a trend in the market, then we're just going to focus on the stock. But this makes it a higher probability trade setup if the market is also supporting our trade. Then I have to make sure the compass indicators align. I have to know that the institutions are in this trade. That's the third thing. So the stock's dropping down here through this. Then we look for a stock with relative strength and relative weakness to the SPY or the Qs. All right, if that checkbox is marked, then we say, okay, where is it where's the price right now? Is it near support? Is it near resistance? If it is, all of these criteria meets. The stocks that drop out the bottom of here will be stocks that we can trade. And we're going to pick the best of those. All right. So again, the funnel method, and this is important. If you're going to take high probability trade setups and have consistent profitability and have a high win rate, this is what you need to do. Again, identify the market trend for the day if there is one. Trade in that direction. Again, the stock to be traded should have the daily and 5-minute chart aligned. And I really emphasize this. This is critical. Those charts need to be aligned. The compass indicators must align in the direction of trade as well. You've got to know that the institutions are in there. It's got to have relative strength or relative weakness to the SPY. Now on the 5-minute chart, you want the stock to be above the VWAP. I'll show you that on the chart. The volume weighted average price, you want it to be above the VWAP for longs and below the VWAP for shorts. Institutions use this VWAP all the time. Then you want to enter the trade near a confirmed support for a long and a resistance level for a short. And there should be no nearby support or resistance on the daily chart to limit your profit targets. It just means if you look at the stock and you see where it's going, you got to know if you get a 200-day moving average 15 cents above your entry, you don't want to be taking the stock. It's much too close to a resistance level. And the key thing, and this is probably the hardest thing that the traders, they just can't seem to get this, which is to have patience. They just will not sit there for an hour and not make a trade. This is really critical. You've got to have patience, not only getting into the trade, but you got to have patience when you're in the trade. You can't be getting shaken out on 5-minute candles. When I get into a trade, I'm looking at the daily chart. As long as the daily chart stays bullish, I'm going to stay with the trade. All right. Now the strategies we use in the room and on the alert service are several. We do straight calls and straight puts. We actually just closed the call out in the Shake Shack today for a nice gain for $2 a contract. I use debit spreads using weekly options expiration. It's a little different than what most people do. I found with my analysis of my trades that I've done over the years that this kind of a debit spread produces a much better result than going further out in time. We do what's called time spreads or calendar spreads to capture volatility crush over earnings. This is a non-directional trade. What we're doing here is we're taking a trade just before earnings. So if it's going to be earnings tonight, we take it this afternoon. And what we're going to do is we don't care which way the stock moves. We only want it to move inside of the range that the market makers are predicting. If they're predicting a 10% move up or down, we want it to trade it within that 10% range. And if it does, we're going to be able to capture the volatility that comes draining out of the premium on the options when earnings comes out, because the market makers jack up the price on the options before earnings because they don't know which way the stock's going to go, and they don't know how much it's going to go. So they put a level in there that they think it's going to go, and that becomes the volatility. Once the earnings come out, of course, the volatility is gone. We capture that with a time spread. We also do what's called a weekly ATM strategy. This is basically a strategy where we sell puts against a longer dated put. We could have a put out into May, and we'll be selling puts every week against that stock to bring in premium. It's kind of like a staggered credit spread. So we're bringing in credit every single week on an ATM on a long dated put. And there's certain criteria. Obviously, the stock needs to be neutral to bullish. And we also do straight credit spreads to capture premium over a few weeks. We just closed one on Goldman Sachs today. We collected $65 a contract. We bought it back for 5 cents, so that we made 60 cents out of the possible 65 of premium. That's pretty nice. And we've got one in Bank of America right now too. And then we have a trade called the SPY Super System, which we haven't done hardly any of those right now because this requires the SPY or the Qs, but the SPY specifically to be moving either up or down in a strong direction. It has to be trending. It has to be at a support or resistance level, and then we can get in and take that trade. But it's only for like usually 3 or 4 candles, so I don't alert on these. These don't come out in alerts. These come out, can be called out in the room if we can come across any of them. All right. Now the alert service itself, it's designed obviously for day trades and short-term swing trades. This is not an investment service. We're just doing a service based on doing day trades, intraday trades. A lot of the trades are intraday. Most of them are going to be at least overnight. Sometimes they can be up to 2 weeks. So that's about it. It's designed for traders who can't watch the market all day. Obviously, that's the idea of I don't want to watch the market all day. They just want to be alerted when we've come across a trade. And you're going to get real-time alerts on the highest probability trade setups that we find. We find them in the room. I send them out an alert. We call them in the room. I take all these trades. All of these trades that you get alerted on, I'll be in those as well. So I know what's going on. If we're down money, people tell me, what are we going to do? We're down money. I know we're down money. I'm in the trade with you. I always know where we are. And we take only the highest probability trades by identifying the institutional involvement, market internals, basically which way the market's going, and then we do some deep diving technical analysis to find the very best of the very best trades. And I do have videos on all of these things. This is just a P&L of the last 90s. It just shows the direction of the P&L, and it's fine. I think this was in July. It just keeps going. This was I guess in December, but this is typically what we see. It's every year. It's been very nice like that. Just kind of a couple of highlights here. This was past March to June last year. I just keep this up. I've got plenty of examples, but this was if you invested $2,000 in each trade, and I'm not saying everybody needs to do that. I just need some sort of a baseline to base this on. But if you invested $2,000 in each trade, In March, we had 37 wins, 6 losses, 86% win rate, $8,900 profit. And you can see here we get 86, 87.5, 87.5, 86. That's pretty consistent during this period of time. And a lot of it, listen, a lot of how much money you make, a lot of it depends on the market. You know, if the market's trending, then you can make more. If it's not, the market's chopping, you can't make as much because you got to get out of the trade sooner. So you can see in the case here, we had an 87.5% win rate, but we made less than we did on the 86% win rate. So that's the way this works. And I'll show you the exact results we've had so you can see what to expect. But again, that was about a $30,000 profit over those 4 months. All right, so I'm going to show some individual trades, and the point of this is obviously to show a kind of a recap of what trades have, how the trades have worked. But the key thing I like to show this is because I want people to understand what kind of a percentage gain to expect. I'm not one of these people that you get an email from or to watch a video that tells you you're going to make 400, 500, 600% of the trade. I'll tell you right now, you can't do that consistently enough to be a consistent trader. It's just not going to happen. Our results are going to be 10, 20, 30, 40%, 50%. We did get up to 108 here, but generally speaking, they're going to be somewhere between about 20 and 50% most of the time. And that's what to be expected. You know, if I'm in a trade for the day and I can make 25 or 30% at the end of the day, I'm going to take the profits and then reevaluate the next day, so I take the risk off the table. So that's what you'll see here. You know, 23% UPS, 43% in AI. You know, FISA 22%. This STX was a nice one. We actually had some news that helped us on that one. But you see 10, 20, 25, 14, 31, 28, and losses. We have losses. We had a firm loss here and Amazon. This was a news event that knocked us down. But September trade, 25 wins, 2 losses, pretty nice. 92% win rate. 2,000 invested each trade, produced 77.88. And again, I made a note that these were outstanding results because the market was horrible to trade in September. Really choppy, really hard. October, again, an 86% win rate, 24 wins, 4 losses. But you can see the consistency in the percentage gains on the trades we make here. 29, 24, 19, 23, 33, 32, 43. I mean, it's 61 here in JD. Very consistent. We have a break even here. This was a time spread. This was over earnings. That was a 28%. And we had a loss on GNRC. So again, have some losses mixed in there. But that, again, $4,480, not bad. November, similar results here. 84% win rate, $5,100 profit. See the percentages. They don't change that much because we're taking a structure of high probability trades, and we're going to take profits when we can. And we'll take as much as we can, but we'll take profits when we can. And again, this was a strangle here. We took 40% on, 20% on a credit spread. And so you can see the results and what the percentages are. And that's what I want you to be aware of, that's what you can expect. And these were December. We didn't do a lot of trades in December. 14 and 2, 87.5% win rate, netted only $3,100. But that's, I guess, $3,100 isn't bad, for a slow month like that. But see the percentages, again, very similar: 36%, 25%, 14%, 63% in Microsoft, 31% in Microsoft. Didn't trade a lot through Christmas and the holidays, but still made a nice $3,000. January was a really nice month. We actually closed January with 20 wins and no losses, but we had 2 open trades from January that were closed in February for losses. So they actually, I consider them January trades, since that's when we opened them up. I think it was Gilead and I think IBM, but this was a Gilead 100% loss. But we had 20 wins and 2 losses for a 90% win rate. Again, you see the percentages here. They stay right in the same range. This was up to 50 here, 65% in Mara, 96% in Boeing. That was pretty nice. Again, but 2,000 invested in each trade, netted $7,500 in January. And here we are through February right now. And I updated this as of today. 17 wins and 2 losses with 1 more day to go. 88% win rate, 2,000 invested each trade, netted $8,137. Now, the alerted trades, and I want to distinguish between this because we take trades in the room that we can't send alerts out on because we take them close to the end of the day where alerts, the alerts are not going to have time to be acted on, or I think I'm only going to be in the trade for half an hour, so I don't want to alert because it's not fair to the folks who are getting alerts. So I actually, this is the first month I actually split out the alert services. The alert service, we got 14 wins and 2 losses. Again, that's still a pretty good % win rate, and 2,000 invested in each trade on the alert service this month, produced so far $5,482 profit. So again, 8,100 in the room, 54 on the alerts. But you know, for what the alert service does and what you have to do, this is pretty, I think, pretty extraordinary results. And I think it's really, really nice. Good question here. What size of account would be ideal to put 2K in each trade? Well, you know, if you're putting 2K in each trade, and I'll show you how I broke that down at the end of the year. I would say, you know, depends on how aggressive you are. I would typically want to have about a $40,000 account to a $50,000 account. Because if you got a $50,000 account, $2,000 is basically a 4%. On a trade, and I wouldn't want to be putting too much more than that. And I'm just using this as a baseline. If you have $30,000, you could easily put 1,000 into each trade. Okay. All right, and these are just some specific trades. These are just trades that went. These are some of the trades that went out on alerts. These are all alerted trades here. But again, you want to see the percentage, the profits. There's a 108 there. That's the big one. 16%, 32%. We were in this trade for 2 hours, and we alerted on that. The crowd was an overnight trade. Get in at $6.90, out for $8. So that was $330 profit on a $2,000 investment for an overnight trade. And a lot of the trades will be overnight. BNTX was overnight. And the reason I mention that is because if you have less than a $25,000 account and you don't have a cash account, then you're limited to doing 3 intraday trades every 5 rolling days. So you're going to get a lot of trades, time spreads, put credit spreads. Those will all be, none of those will count as day trades. The only trade that counts as a day trade if we get in and out the same day. And I do a lot of trades that are overnight. That's part of the reason I do that. So these are some of the trades that we had on the alert service. There's some more right here. Recent one we just did workday not long ago, 26% profit. This was an overnight trade. Meta in for 13.10, out for 16.15. Nice. And again, this was a this was actually a put credit spread. Sorry. Get in for, we got a 50-cent credit when we got in, closed it for 10 cents, made a $40 profit. So these are the trades that you see, and this you can see they're doing exactly the same as the ones in the room are. So just to kind of answer that question, Eric, that you had, this is a recap of the 2023 trading results. And what I'm doing here is just saying, if you use $2,000 a trade, and I'm not saying that's what you need to do, but I have to have some sort of a base to use. So if you have a 2,000, if you use 2,000 in every single trade that we did, you would have produced a profit of a little over $60,000. So if you had an account balance of 50,000, initially when you started, each trade would have used 4% of your account. All right. Now that balance is, that percentage of the account is going to keep dropping as your account balance grows. And it produced 120% return on the initial $50,000 account, growing the accounts to over 110,000 at the end of the year. So if you started in January, by the time you were trading in December, if you were still using $2,000 a trade, that was now less than 2% of your account balance. All right, so that's just kind of a recap of how that works. And listen, I don't put same amount of money into each trade. I put more money into trades when the market's trending. I put less money when it's choppy. Sometimes I'll take 20 contracts and then sell off 10 and then hold 10, but I needed a baseline to go by. All right, so on the trade, on the alert service, I want you to just kind of know what it's going to look like. What you're going to get on the alert is every alerted trade is going to have the stock symbol, obviously, the option strike price, the option expiration date, and the price to pay for the options. And that could be a range. It could be $1.05 to $1.10 or something like that. So you'll get all of those. There may be an exit price on there, a take profit target, but most likely on the original alert there won't be. What I'll do is I'll watch the price action and I'll send another alert out with a take profit target that you should go in and set the price in your trading platform. And you should set it TTC, or good till canceled. So if you're not there, when the market opens in the morning, you still get your order working. So that's really important. And now, if you get an alerted stock, by the way, and you don't want to trade options, you want to trade stock, you can buy shares. I mean, it's the stock is the alerts are still good if you want to use shares. Doesn't really matter. I use options on them. So again, how do we achieve these stunning results? And this is important. Again, we are able to identify when the institutions are driving a trade and when they're not. And I think it's important for most people who are in the alert service even to know where these trades are coming from. How are we finding these trades? So when the institutions are driving a trade and when the market internals are heavily bullish or bearish, we're going to trade those. We only take trades when both of these are in our favor. That's not necessarily true. If the market internals are just choppy, but the institutions are driving a particular stock, then we'll take the stock based on the institutions and trade it by itself. And again, this just kind of says it's the institutional money flow. This is what drives the success we've had. And the success has really been, I mean, I'm very proud of the 85 to 90, 92% win rate, 2 years in a row. And I did this from before I started a room, but this is what we do. And what we do is we identify when institutions are influencing trades, gauge the overall market sentiment, and then put those together and find the very highest probability trades for them. Okay. Now, how does the Compass system find these highest probability trade setups? Well, we do what's called a triple screen assessment. And what's a triple screen assessment? Well, it's some people call it a fractal. It's basically looking across multiple time frames. And we look across multiple time frames at 3 different things. We look at momentum, we look at trend, and we look at money flow. All 3 of these. Now, if all 3 of these are going in the same direction across multiple time frames, then the likelihood that it's an institution driving this trade is extremely high, in the 97, 98% likelihood. I mean, it's very, very unlikely that stocks with all of these things moving on different time frames in the same direction are being driven by retail traders. It's very, very unlikely. All right, so what I want to do is here, I want to show a couple of charts here. I'm gonna get into the HEIKIN-ASHI candles here in a second. This is a Tesla 5-minute chart here, and I just want to show this before we get into HEIKIN-ASHI candles. I want to get in here and show what the candles look like. This is the Compass system. This is the money flow. This is the current time frame momentum. This is the multi-time frame momentum. This is the long-term trend. These are the things that are being looked at by the Compass system to tell us whether institutions are in there or not. Obviously, green and blue is bullish, red and yellow are bearish. It doesn't take a genius to look at this and know that the institutions are in here buying the heck out of this thing. So these are HEIKIN-ASHI candles. HEIKIN-ASHI candles, if you see here, this has got a wick and a tail and a wick and a tail. HEIKIN-ASHI candles have flat bottoms when they're bullish and flat tops when they're bearish. So when it goes from a wick and a tail to a flat bottom, that's what's called a HEIKIN-ASHI reversal. This is a reversal, a bullish reversal. Now this HEIKIN-ASHI reversal is coming right off of this little green line here, which is a 15 EMA. That's a support level. And it's popping up with what's called a pop out of the box symbol. This is a compression break that the Compass system produces. This is an arrow the Compass system produces to show you a breakout. And you can see how smooth this trend is. And you just stay in this trade until it starts to lose momentum, which it did right here. And that's how these HEIKIN-ASHI candles look. And this is it on the Compass system right here. All right. So what's the advantages of HEIKIN-ASHI candles? Well, there's several advantages over candlesticks. First of all, it identifies confirmations of trend reversals like I just showed you there. And we'll get into some more of these so you can see exactly. It allows trade entries on a confirmed reversal, avoiding failed breakouts. If you're just looking at regular candles in a stock, let's say it comes down to a support level and you think it's bouncing off the support level, so you jump in. If you don't have confirmation that that support level is holding and it's going back into the same trend again, then you can get what's called a failed breakout. By using a HEIKIN-ASHI candle, you reduce the likelihood of a failed breakout by a lot. It smooths out price movements to eliminate noise, as we just saw in that chart here. You see how smooth that is? No wicks and tails. That's not what you see with candlesticks. That's what you see with HEIKIN-ASHI candles. So it allows traders to stay in trades longer, avoiding shakeouts. And it identifies waning trend momentum so you can exit for profits. And again, it makes it much easier to visualize the current trend. All right, so that's what HEIKIN-ASHI candles. That's what the advantages of them are. All right, so I'm not going to read this whole thing, but if you have not used HEIKIN-ASHI candles before in your technical analysis, you might want to try to use them because they can really improve your trading. And what that means, HEIKIN-ASHI means average bar in Japanese. It's basically, it smooths out the price action, so identifying trends and reversals is clearer since they eliminate a lot of the noise and make it easy to see trends and stay in a trade. All right, and bullish HA candles have flat bottoms, bearish HEIKIN-ASHI candles have flat tops, and bullish trends will have flat bottom HEIKIN-ASHI one after another. Bearish trends will have flat topped candles one after another. That's how you see these trends. Okay, I'm going to go over these reversals here in a minute, but basically, reversals into a bullish trend will have a flat bottom HEIKIN-ASHI candle, followed by a smaller doji HEIKIN-ASHI candle, having both wicks and tails, followed by a flat top. That would be a reversal from a bullish into a bearish. In other words, you go from flat bottom candles to flat top candles, and vice versa on the short side. One thing to be aware of is that when you have HEIKIN-ASHI candles up, the price that shows on the HEIKIN-ASHI candle won't be the exact same price that's be reflected in the market at that point in time. You have to look at your actual platform to see that because HEIKIN-ASHI candles are calculated differently. It will only be in pennies different, but just so you'll be aware of that. All right, so I'm going to skip right past this. Again, I trade a lot of these things. I can generally get about a 90% win rate, 85 to 90%. I will mention that when you have a valid HEIKIN-ASHI reversal, the first thing that needs to be true is that the HEIKIN-ASHI candle height has to be at least as large, preferably larger than the prior candles. All this is saying is if a stock price is coming down fast with big red HEIKIN-ASHI candles, you get big red, big red, big red, and then you get a little by me HEIKIN-ASHI reversal to the bull side, but it's a tiny little candle. That's not enough to say that reversal has occurred. You've got to get some larger size to offset that downtrend because it may just be a pause in the downtrend. All right. And again, we talked about this. This is, and you can see this if you go over the video again. You'll see all of this. You get a copy of this. It just tells you that it should be on a stock with relative strength. It basically goes into the other criteria that we need for taking a trade. In other words, there is no one indicator that you can use to trade off of and be successful. You need to be able to take a lot of them in combination, and you need to be able to actually look at a stock, what's called the context of the stock. What does the actual chart look like contextually? So this is a chart on HEIKIN-ASHI candles, just a graphic to show you what I mean. So here's a flat top candle. That's a bearish HEIKIN-ASHI candle, followed by a wick and a tail, a wick and a tail. Now, this is another bearish HEIKIN-ASHI candle. This is not actually considered a reversal. This is considered a continuation of the downtrend. This is a HEIKIN-ASHI continuation because we're still short. And it keeps coming down. Notice that the tops are flat all the way down here. And then you can start getting green candles with wicks and tails. And then you get a flat bottom HEIKIN-ASHI candle right here to the upside. See how nice and big it is? This is a bullish HEIKIN-ASHI reversal. This tells you that the bearish trend is over. The bullish trend is starting, and here you're getting flat bottom candles stacked one after another. Now notice by the way that on the pricing, the price when each HEIKIN-ASHI candle's open, it's going to open right in the middle of the previous HEIKIN-ASHI candle. The open price is always going to be in the middle of the previous HEIKIN-ASHI candle, just like that. All right, so that's what the HEIKIN-ASHI candle looks like. Now, I want to this little impromptu. So this is Tesla again. This was a bullish HEIKIN-ASHI we had in Gilead. This is a daily chart right here. See this HEIKIN-ASHI reversal? See this got a little tiny tail on it, followed by a flat bottom with also a pop out of the box symbol. Perfect level, perfect place to take a reversal. Compass system all green. This was GE. We took this GE trade. You had to wait a while on GE, but this is where we get in. HEIKIN-ASHI reversal. Wick and a tail, flat bottoms. Right here, we did have some yellow on the longer term trend, but that was because it had been so choppy in here. I had no problem with that. Everything else was green. But that's a HEIKIN-ASHI reversal. This was an IBM that we took, a HEIKIN-ASHI reversal on IBM. This is my TC2000 chart, but I just wanted to show you in here. You see the HEIKIN-ASHI candles, flat bottoms all the way up. And this comes down with a This is a bull flag. If you're familiar with bull flags, it's a big volume candlestick with a big pop, and the stock drifts down on lower volume, and then it breaks out of this downtrend right here that they call an algo line that I draw, and broke up. But that's a HEIKIN-ASHI reversal candle in IBM. And this was one on Teva that we took. We were in this for a few days, took a nice profit on this one. We got in right here on this HEIKIN-ASHI reversal candle, worked really well, and took profits on that one. That was on the 14th of Valentine's Day. All right, so I want to look at some live HEIKIN-ASHI charts, and then I'm going to come back to the presentation. So let me just close this down for a minute. And I'm going to bring over TC2000 because it's easier for me to see here on TC2000. It's easier for me to see HEIKIN-ASHI reversals. I will show one here that I've got. This is the daily chart right here. This is MSTR, and if you look on here on the daily chart, let me go to the HEIKIN-ASHI candles. Right, these are regular candles. These are HEIKIN-ASHI candles. You see here on this this Microsoft. See this wick here, followed by a flat top, flat top, flat top, flat top. That's a bearish HEIKIN-ASHI reversal. This is a bullish, but it only lasted a day. Didn't last long at all in Microsoft. Dash, we had some. Okay, this was Dash. So here's a HEIKIN-ASHI reversal right here on Dash. And you get this daily chart, nice move up in Dash. And then you can see it was time to get out. And I had some resistance here. But this was a nice HEIKIN-ASHI reversal right there off of that position right there. Let's see. Yeah, this was SBAC. This was a really long-term downtrend. Okay, so here you got a HEIKIN-ASHI reversal here. This white line, by the way, on the daily chart is called the 8 exponential moving average, and I use this a lot for judging if the stock I should stay in a particular trade. The stock stays below it or above it. But you see this HEIKIN-ASHI reversal here, and you just see the flat bottom tops on all these candles. Then you get some compression. You notice this purple line right here is a 200-day moving average. Notice we get some compression right there at the 200-day moving average. So you want to take profits there. Now we get another HEIKIN-ASHI reversal at the 100, and now a breakdown below the 100-day moving average with another HEIKIN-ASHI reversal bearish. And you can just follow this thing right down on the 8 and probably take profits down in there. So that's one there. And I want to run something here. Hold on just a sec. I'm going to run one of my scans that I've got. We're going to look for bullish reversals. I'm going to pull it over here. Oops, I'm going to try to pull it over there. Pull it to a different screen so I'm not cluttering it up. And I'll look, these are some of the ones that just popped up today. And I haven't even looked at these yet, so I don't know. So, okay, so this Beyond, okay, they had earnings. That's all pretty obvious. That was a HEIKIN-ASHI reversal. Bank of America. Now we're in this as a put credit spread. But notice we had a HEIKIN-ASHI reversal right here. You see the wick in the tail? Flat bottom, flat bottom. So this is the stock we're in for a put credit spread. AT&T, HEIKIN-ASHI reversal right here, right to the 50-day moving average. But you can see how easy the trend is to spot with these HEIKIN-ASHI candles. I'm just clicking through these things randomly. I'm not even looking at them to see. But here's VTYX, a nice little move in VTYX here. It's continuing up. We get a little doji here, and now we get another flat bottom, another HEIKIN-ASHI reversal candle. ADT, another HEIKIN-ASHI reversal. And this is just a scan I've got that shows today's results. I'm looking for HEIKIN-ASHI candles that could potentially give me a trade to get into tomorrow. Here's Disney. You see Disney had a big one here, earnings, and then moves up. It's come back down. Now we're getting HEIKIN-ASHI reversals again, a flat bottom and right here and here. So that's a HEIKIN-ASHI reversal, but they're kind of small. They're kind of small. LUMN, same thing, too much resistance for me. This XLI, this has been trending up for a while. WMB has as well. These will be continuations to the upside. It is for earnings, I'm suspecting, or some sort of news today on that. There's TJX, nice HEIKIN-ASHI reversal there. So we had a little bit of a tail here, a little wick here. So this is a HEIKIN-ASHI continuation. All right, so these are what we see for HEIKIN-ASHI continuations ARWR. This was some news on this one. And let's see if I see anything here that jumps out at me. Lowe's. Yeah, Lowe's is good. See, it had a little wick and a tail here yesterday, and now it's flat bottom again. That's a bullish continuation in Lowe's. CCO, yes. So that's what I look for. And I'll just quickly do a scan on the bearish ones, so you can see those. I want to go to the current one. Bearish reversal right there. All right, move this over. All right, so these will be bearish ones. We'll see what they look like. Again, this is I haven't even looked at them yet. So there's NEO. Obviously, you can see the bearish reversal right here, and HEIKIN-ASHI reversal coming down. This is, by the way, what the regular chart looks like. You notice HEIKIN-ASHIs do not show gaps. NVAX, another big drop. BABA, another flat top candle, HEIKIN-ASHI reversal. JD, same thing. So these are just the bearish ones that popped up today. Lemonade, a big drop down there. This is how you can trade these. There's gold, pretty nice. Notice this nice reversal here off the 8 exponential moving average. Look at how that just ground down on there. And if you go back, you can see it's even you did it again right there. So some pretty good trades can come off of these things. So these are what I use for finding HEIKIN-ASHI reversal candles. And I hope this helps a little bit as far as finding the best trade setups, and when to stay in them and when not to be in them. All right, let me go back. I need to go ahead and do the slideshow from the beginning. I gotta bear with me just a second. All right, so we'll zip through here, get down to where we are. All right, so we looked at some HEIKIN-ASHI candles. And I'm going to look at that. I want to show you some, these are regular charts that we've been trading off of. This is the compass system, and these are the high probability trade setups of stocks we've taken. This was workday right here. This is a daily chart. This is where we get in right here, as we actually get in right back here as this stuff went to yellow. We were getting some chop here. So we got in when it was blue, then it went to yellow, but the current time frame stayed blue and went to green. So I was okay with that, especially because it was coming out of this is called the dynamic compression zone that the compass system produces, this shaded area, and it was coming out of dynamic compression zone. So I was fine with that for long, which worked out really nicely. This was MDT. This was another one we took here. Again, you see how this went yellow to blue? We get green already, so that tells us the institutions are now in here. We can take it right here, and we rode this thing up and took a nice profit in that. And these are regular candles on the daily chart. Vertex, we were in this for 3 days, took a 30% profit. Again, we went to all green right there. It was popped up off of this above this 15 EMA, and we took that trade and it worked relatively nicely. We weren't in very long. Biotech. This was an overnight trade in at 8:30, out at 11:30 on McDonald's. Again, here's our entry. Notice the dynamic compression zone I mentioned to you, the shaded area. Here's the pop out of the box single, also a compression break. Coming off the 15 EMA, this little green line, and here's our pop up. We just took this overnight, get in at 8:30, get out for 11:30, 37% gain overnight. Obviously, the institutions are in here buying the heck out of this thing. This was Moderna for a little drop here, 33% profit on this drop. This was a daily chart. We just took this overnight, one time, boom, and out. And again, you see this went green to yellow. Compass system telling us the institutions are now selling across the board here. We already had multi-time frame momentum going down. We had a long-term trend going down. We had money flow going down. And this went from green to yellow. Now we had current time frame momentum going down. Amazon, this was a nice 32% profit. And again, jumped up pretty nicely. Just shaded that for the day. This was a nice loss. We took a nice profit in JD. I think I showed this one on the list of trades we took. You can see this went green to yellow. Everything else was red. We took it here as it comes out of this dynamic compression zone, took it short and made a nice profit on it. Dollar Tree, same thing. You know, are the institutions selling this thing? They sure as heck are. Look at them. You can see that it's screaming at you that this thing is a short. And Datadog right here. This one was another one. See, dynamic compression zone, coming out of a dynamic compression zone. Everything's yellow or red. You get here, we took 21% overnight on this one on Datadog. All right, I just do a few more. This was crowd. This was a nice 20% profit on crowd. We just took this on a pop-up. Again, we went green, blue, everything was meeting our criteria right here. Was right after earnings. We took it on this breakout of dynamic compression and got in and out the same day for 20% profit in crowd. So this is how we make money. This is how we find the trades. This is just not randomly picked. These are high probability trade setups, and only high probability trade setups are the ones we take. Somebody asking, can I point out the VWAP on these charts? Let me find a 5-minute chart. Yeah, this is a 5-minute chart of ENPH right here. Right, this is the VWAP, this pink line. You'll see if you have the compass system, you'll get this pink line on there. You can put the VWAP on any chart, but this is the VWAP on ENPH, and we were taking this trade for a quick trade. We get this pop out of the box signal right here to the downside. That was telling us we're breaking out of compression. It was coming off this little red line is the 15 EMA of an EMA. That's a short-term trend. It's breaking down. The institutions are selling the heck out of this thing. It's red across the board. So we get in here, we get out an hour later for 20% profit. And there's the VWAP. You notice we wouldn't touch it until it gets below the VWAP. Verizon, same thing. This was a really interesting trade. Verizon is not a stock that moves much. And do I only use it on the 5-minute charts? Yes, I do not use the VWAP in anything but the 5-minute chart, Cal. I don't. They're no use on the daily chart because the institutions do not use them on the daily chart. They only use them on the shorter time frame charts, specifically the 5-minute in my case. This was Verizon. This was an interesting one because you see it's just breaking below the VWAP with a pop out of the box symbol right there. Now Verizon doesn't move a lot, and the options are really cheap. We got in the money options, and I always buy in the money options. I bought in the money options for, and they were out like 2 weeks. I bought them for 45 cents. And this little drop right here that came down, when we get out of this thing, and 1 hour later, those 45-cent options. So I paid $45 a contract. We get out for 67 cents an hour later, and the reason we did that is because this thing was moving and giving us this pop out of the box. Everything was red. We knew the institutions were selling it. That's if you got 10 contracts, it's $450. An hour later, that 450's turned into 670. That is pretty good. That was a pretty nice trade right there. This was a SPY super system. This just kind of shows you what we look for on the SPY super system. I'd be looking at market internals, but you see I'm getting a pop out of the box signal right below the VWAP. After it comes off the 15, the institutions are selling. That's a good entry place to take right there. So I would just ride this thing down. As soon as I get any indication that the momentum is waning, I get out. This is not something I'm going to alert on, but we do take them in the room. Another nice Netflix trade here. Everybody can see this markets that the institutions are selling. We're breaking down below the VWAP with a pop out of the box signal. We take it, we write it down, we get out. All right, so I don't want to do too many of these because I can show you hundreds of these things for trades, but I just kind of want you to be able to see the compass system. I want you to see what it looks like so you can see how easy it is to see institutions selling. I want you to see the indications we get on the compass system with the pop out of the box signals, and when to take it. There's Tesla. We took this, we rode this right to the end of the day for 30% profit. Then later we took one overnight. And this was, again, you see the VWAP, it was below the VWAP at the end of the day. And we were getting all red and yellow. So the institutions were selling it. And it was breaking down with a pop out of the box signal. So we actually took put options overnight on this. The stock fell from 120 to 112. The puts exploded. We get out down here. The puts exploded by about $7 a contract. So that was pretty impressive. All right, this was Tesla that we've seen this one. That's the HEIKIN-ASHI reversal setup. And this was, I just want to show you quickly about using the daily chart and the 5-minute chart together. This was QSR. Now I wanted to trade QSR because I love the daily chart. You can see we went blue, everything was blue and green. I wanted to get into this. So we intraday traded this, but where do we want to take it? Well, we don't want to just jump into it willy-nilly on the 5-minute chart. So we wait and wait and wait until we get everything blue and green. You see how this was red and yellow? We get blue and green. The institutions now are buying QSR. It's coming off the 15 EMA. I got a pop out of the box signal. This is the 5-minute chart. And I know the daily chart is good. So I can just ride this thing all the way up. I kept getting pop out of the box signals all the way up. I get this start to fade. I get out. Once the yellow, I'm out of the trade. I take the money. All right. And it's just kind of we finished April with 19 in a row and 10 in a row in May. I don't even know why I still have on this, but we've had lots and lots of wins, obviously. And again, so these are the strategies that we take in the room. Straight calls and puts, debit spreads using weekly expiration dates, time spreads over earnings of calendar spreads. These are non-directional trades. Everything else, weekly ATMs, this is selling puts every week against a longer term dated put to just bring in premium. Same thing as credit spreads, which just bring in premium. Credit spreads, of course, have the same expiration date for both these strikes. These do not. This weekly ATMs has a long put with a different expiration date than the short puts, so that you can just keep selling them each week. And the satisfy super system. So this is how we trade in the room. This is how we find high probability trade setups, and this is how we find the trades to alert on. And again, this is just kind of a the compass system. This shows you what those look like. So let me just check quickly here. I don't see that looking to see if they put the links in the chat room, but I don't see them. Okay, so here we go. I just want to show you what the offers are. This is the Compass Alert Service right here. It says President's Day sale. This is the one I've been using this month. So it's 50% off. If you use the coupon code SAVE50, if there was a link, you could, and you'll get the full year for $7.98 and quarterly for just $2.96. Let's see. Okay, they put the links into the chat box. So the links are in there in the chat box. If you're interested in any of these offers, you can do that, or you can just call. You can just call and talk to them. So anyway, this is the alert service. Now the alert service, you'll get a month in my trading room for free. You'll also obviously have access to the Discord chat and the text alerts, of course, but you'll be also in the Discord room. And I have about 25 videos on all the strategies we use, HEIKIN-ASHI candles, the compass indicators, how to use them, how we find the highest probability trade sets, all the things we talked about here, going through the highest probability trade setups. So that's the alert service. 50% off for $7.98. This is really a good deal. You saw the price, the profitability we've had this month already, but $6,000 or $7,000 already. I think on the alerts are over 5,000. So that's pretty good. But quarterly, you can try it for $2.96 if you want. The trading room itself is again, save 50% off the room, $849 for a year, pretty good, and $148 for if you just want to do it for a month. And again, you get the same thing. You get the Discord chat room. Obviously, you're in the trading room for a year if you sign up for it. You'll also get the alert service if you're in the room, and then of course you'll have access to all the videos. And if you have any questions, you can just pop your name and number in the question box here, or in the answer where the questions are, or in the chat box. Rory will call you, or you can call him directly, or you can just click on the links. And if you're interested, and I look forward to having some folks here in the room, because we have quite a big number of traders in my room every day, as well as really a lot of the alert service. And I'm always liking to have some more folks come in, take advantage of learning how to trade, become a more consistently profitable trader using high probability trade setups. All right, so that wraps up what I have to say. I hope it was helpful. I hope you enjoyed the HEIKIN-ASHI information, and I look forward to seeing some folks in the room pretty soon. So everybody have a great evening, a great rest of the week. One more day this month, and hopefully we'll wrap it up and we'll start off a good March. Have a great evening, everybody. Thanks for being here. Hey, Mike, thanks a lot. Appreciate it. Thanks, Cal. Appreciate it. Thank you.